Welcome to our first episode. Today we're going to be talking about mortgages. Decided to bring someone that's very dear to my heart, someone that I've actually had the pleasure to work a few transactions with. Without further ado, let me introduce you to our first guest speaker. First one, huh?
I am.
Yeah.
Premier.
Yeah. Don Principe, ladies and gentlemen. Why don't you introduce yourself, Don?
Thank you, Danny. Thank you for bringing me in today and giving me the opportunity. I've been in the business for, 30 years. I had a lot darker hair when I started. I had a lot more hair when I started. But I get up every day and I love what I do. I really do like helping people, putting them in a house, first-time buyers, empty nesters, or helping people save money by refinancing. I work with a great company called Equity Resources. We're out of Ohio. Been in business 27 years. We're a mortgage banker, so we fund with our own money. And we are a direct servicer to Fannie Mae and Freddie Mac, as well as Ginnie Mae. We do conventional financing, predominantly a lot of conventional financing, but we also do FHA, which is a first-time homebuyer program. We have a USDA program, which is a program for specific markets, urban areas, not too far out of the Connecticut market, such as Newtown, New Fairfield, New Milford, so the general area around Danbury. We also do VA financing for veterans, and we also do construction lending as well as renovation financing. So if you want to build a house from scratch or you want to rehab your property, we also do that as well. The company has 25 branches throughout the United States. Obviously, I'm in the Bethel, Danbury area. And our mission statement is to improve the lives of families by offering raving fan service. We create an atmosphere where we leave people pleasantly surprised that the service levels that we give has met their expectations and in many instances exceeded them. And that's what our goal is every day, to stay ahead of the competition and deliver good service. That's what we do.
Wow, that's amazing, Don. Which actually, I think it really goes along with what we're trying to do here. Mm-hmm. The idea of bringing you in is because you're over here in our community. Mm-hmm. This show is a way of giving back to the community, a source of information. We want to be a source of information regarding, real estate. We're going to be talking about other things as well, but what better way of giving back but, knowledge, especially, some interesting times that we're living now, right?
Yeah. To say the least.
Yeah.
It's been an interesting year.
Yeah, it has been. Especially in our area now. So, what do you feel with this whole thing about like the New Yorkers coming in and it's just been crazy. Like
it's been an interesting couple of years. I mean, I think we've lived in this state. I've lived in this state for predominantly my whole life, and I've seen a lot of people have some concerns about Connecticut. The exodus out of Connecticut, and boy, these taxes and our governor and whatever else you want to say. But what's happened recently sadly with the COVID coming into play, and obviously the exodus from urban areas, has made this area incredibly interesting as well as attractive to everybody. I'm closing loans with folks right now who just can't wait to get out of New York City, Brooklyn, Queens, New York, Manhattan, wherever. Connecticut's now a very appealing place to go to. And it's a shot in the arm for us because, we have a great state. We have a great community. It's about time that we got some good recognition. So it's good to see. The exodus out of the city is nothing new. Yeah. People have always come to the suburbs for, what we have to offer. And it's been a pretty good shot in the arm for us.
Yeah, it has been, because we didn't know what to expect when this whole thing started. I remember, I think you and I were like talking, and I was afraid to what's going to happen now, with the pandemic. Mm-hmm. And are we going to be able to sell houses or not? And all of a sudden now, like, we're just, you know, like I was talking to you the other day and you're like, I just probably, like, I had one of the busiest months ever. Yeah. And like you said, you've been in the business for what, 30 years now, right?
I've never seen what we are going through right now. I mean, in patches, we've gotten very busy, but we've had a record year as a company. We've hired a tremendous amount of people. When a lot of folks have lost their jobs and have been furloughed, sadly, and hopefully have gone back to work, our industry and our company, we've been hiring people. And it's been amazing to feel as good about, you know, the industry as we do, and sadly looking to the side and seeing folks in the restaurant industry and entertainment feeling the other side of it. But we've been able to help a lot of those people with, you know, refinancing them, lowering their payments, helping them get some cash out ahead of what they think may be a tough time. And, you know, in a lot of instances, they've gone back to work, so that's been good. But now they have maybe a little bit of cushion to work with. So we've been able to help a lot of people, but it's been very challenging for a lot of people, and we've been fortunate to try to help as many of them as we can.
Right. That's amazing. That in the midst of chaos in a lot of areas and with a lot of people, I can see that there's, like, you know, some business out there that are helping people such as you. You know, I think this is the first time I've ever seen, like, rates gone down so low, you know, and so it's interesting because, you know, you always look at the market like, oh, this is a seller's market, oh, this is a buyer's market, you know, and for us here, we are going through a little bit of a lack of inventory right now.
Absolutely.
Where all houses out there, like, you put a house on the market, if the price is right, and if, like, you get multiple offers all day, and we're having, like, all these people overbidding by tens of thousands of dollars, you know, like, so and at the same time, so it kind of is a seller's market because of that, but it is also a buyer's market because someone, you know, like, people are getting approved, I don't know, like 3% rates and whatnot, right?
We've met people's expectations on their rates, and we've actually exceeded them. I think people come in the door thinking they're going to get a great rate, and if the criteria is met, they do, and sometimes they even get better than they were expecting.
Right.
We've been really fortunate, like at the beginning of the year when inventory was kind of quiet and light, rates were down. That spurred some business. Everybody went into, you know, hiding when we all had to shut down for a while. But the pent-up demand, when the weather got a little bit warmer and April kicked in, and May kicked in, obviously, it has helped us tremendously. Low rates has been wonderful for the buyers, and the sellers aren't complaining when they've got multiple bids.
Oh, yeah, absolutely.
Highest and best has become a very popular tagline where folks are asked to give, you know, their highest and best bid soon after putting an initial offer in. It's because everybody else is on board with that property. So. And
that's one of the things that I've always tried to talk to clients about, is like, you know, this is not really a market where you can negotiate a lot. You know, if this house is really something that you want, you have to give them what they want, because there's just, otherwise you're just going to be putting in offers and left and right.
Someone else will come in behind
Someone
you.
else, yeah, absolutely.
And I've told clients more than once, and I'm sure you've said the same thing, when they go out to look at a property, make sure they bring, you know, their checkbook, because you might be writing a check for an initial down payment or deposit.
Right.
On the hood of your car before you leave the
trust
property.
me, I seen, like, I don't usually do this myself, but, you know, every once in a while we'll go somewhere to look at a house with a client, and I see realtors out there with their laptops on the hood of their car, like, just writing offers right there. Mm-hmm. And I was talking to a friend of mine, another agent, and we were laughing, like, a little bit. You know, he's like, "Oh, look at this house, just came on the market," and I'm like, "Oh my God, that one's gonna be gone in like 24 hours or something." Mm-hmm. Should I even, like, write up an offer on that one? For, you know, obviously we do the best that we can to get these properties to our clients, but it's just the lack of inventory and all these people moving in really makes it interesting, to say the least, like you said. Yeah.
I think it's a good idea for folks, Danny, who are out there kicking the tires and looking at properties, to make sure that they come into your office pre-qualified. The idea of going out in this market and not being prepared is one of the few mistakes that a consumer can make. Getting pre-qualified, knowing that when they go out in your car or when they go out and meet you at a house, that they are eligible to buy that property and maybe even go up a step if the property doesn't meet their needs. So I think one thing I should stress to your audience is that spending the time getting pre-qualified is a huge plus. It saves you time. It saves the client's time. There's no obligation. There's no cost. We've got a great platform at Equity Resources called Equity 24/7. That's it's a handheld, or actually it's a cell phone platform where a client can complete their application on their cell phone. Who doesn't have a cell phone and who doesn't work on their cell phone every day? Or they can complete an application on their laptop, iPad, and the application is literally a 15-minute process. You can upload your pay stubs, your W-2s, get everything ready so that when they hit the road with you, that they know what they qualify for, you know what they need, and how far they can stretch. So getting pre-qualified, I think, is something that the audience should be aware of, that we can offer, and there's no obligation, there's no charge.
Yeah, absolutely. So I think that this should be one of the first things that the client should know, is to look for, talking about criteria. For example, you just said that having a pre-qualification letter before even coming out to see properties is the way to go.
It's key. Yeah, it's key. Right? I mean, everybody's pressed for time these days. Everybody's got things going on in their lives that are important. But I say to people, for the last 30 odd years, the first step you take is contacting someone like myself and starting the process and at least establishing a baseline. I think Credit Karma says my credit is 750. Well, when I pull and I see your credit, it may be slightly different. So let's find out. Let's find out that your overtime income that you think has been so great has only been going on for about 6 months. So there are things that people tell me over the phone that once the application gets put together, I have a better handle on it and better way to coach them through the process and get them qualified for the house that's going to meet their needs. But sometimes just a few minutes putting an application together saves everybody an enormous amount of time.
Right. And talking about that, let's dive in a little bit into getting pre-qualified. So what's going on now with the banks? Like, is it easy to get pre-qualified? Let's just say I'm a millennial, right? Which I am. W-2. What are the requirements? Like what
It's a very misunderstood process. I still talk to people today that still think that when they get involved in a mortgage, they got to put 20% down. That's so far from the truth. It's scary. We do 100% financing for folks who are qualified for the 100% product programs. It's not for everybody, but we do programs. We do offer programs for folks with minimal down payment. And if you walk in the door as a salaried employee, W-2 employee, all I need is a month of pay stubs. So if you get paid every other week, 2 pay stubs, a W-2 from 2019. It's good to have an idea of what you've got in the bank. So a couple months bank statements is a real good idea.
Right.
And to get the ball rolling for a regular salary guy or an hourly employee, that's about it. A lot of people have concerns about changing jobs. Oh my God, I just changed jobs. Is that a problem? As long as we can document a couple years worth of employment and know that you have not had huge gaps in your employment, that you've been a good, solid employee out there in the workforce, we should be able to try to help you get pre-qualified for financing, or if not, give you some suggestions on what it's going to take to get you there. But there isn't a lot of scrutiny these days. There's some, there always has been, but we want to do loans. I mean, we do a lot of loans every month for people who work hard and maybe don't have a perfect track record, but they've done the right things to get themselves in a position to be a qualified borrower, either when they come in the door with me or as a result of talking to me for a while and listening to the things that I can suggest. I love being an advocate. I had a conversation with a guy yesterday who's not ready to buy now. He's got some bankruptcy issues. And I hung up the phone saying, this is part of the reason I got into this business. This person's not ready to buy now, but he told me he'll be ready to buy in May of next year. Well, I'll be here in May of next year, God willing. So I'll be ready for him, and he knows now what he has to do. So we do our best to get everybody qualified. It's not as difficult as people may think it is, and the first thing is pick up the phone or shoot me a text or send me an email or contact you and make the first step and reach out to us.
Right. You know, I like the fact, I like the idea about the app where people can just go in there and upload all of these documents themselves. I feel like it's, especially for obviously we're living on a digital world now, so everyone has access to whatever they have right from their phone. They can go right in, and I mean, I think it saves you some legwork as well, right? You
would be very surprised. I mean, I could be out on a Saturday with my wife, walking along on a beach. My phone rings. I look down. Somebody wants to talk. I explain to them where I'm at. They say, I'm sorry to bother you. I said, it's no problem. This is your cell phone. Yeah, this is my cell phone. I can sit from my phone walking on the beach and send them the link to the application. They can complete the application. By the time I get home, have uploaded pay stubs and W-2s into the system, and I'm still on my way back from the beach spending a nice Saturday with my family. So the old days, I'd have to get out a piece of paper, ask them 55 questions, and be on the phone for 45 minutes. Now they can sit on their couch, fill out the application. I could be out on a weekend and deal with it, and we're all completing what we have to do in the privacy of our own times.
Isn't that amazing? Isn't that amazing?
It's a time saver.
Yeah, it really is. It really is. And I was talking to our I guess I should call him our director here of the podcast, and we're going back and forth with the idea, putting it together. And we're like, what better way to get our message out there? Because then, there's no geographical restrictions with the internet. It's the most powerful vehicle right now to get your message out there, especially when there's purpose. I truly believe that in this industry that we are, for example, like we have, like with Rise Up Realty, we have a saying that, shelter at your hands. Like, we want to help people come out of rent, help people to maybe start, investing on getting some passive income, and what better way to get this message out there than digitally? The internet is just amazing. But going back to what we were talking about, so let's just say I'm a 1099 worker, like self-employed. Like, how does that work?
It's a good point. I talked about the W-2 borrower, but I do a lot of self-employed folks as well. A self-employed borrower has to be in business for 2 years. The idea of starting a business is daunting at times, and that first year can be challenging. So having 2 years worth of documented tax return income gives us an understanding that the customer is going through the ups and the downs of getting the business off the ground.
Right.
So 2 years self-employment, so tax returns, that is what we do. When we get halfway through the year, we'll ask you for a profit and loss statement, or partway through the year, a profit and loss statement that gives us an indication how your business is going in 2020. So when you have a 2018 and 2019 set of tax returns and you have a profit and loss statement that gives us an indication of how things are going this year, that gives us a good handle on what can be a stressful transaction. The self-employed borrower, as we all know in this business, is up against some tough times right now.
Right.
And it is not easy, unless you're in a particular business. It's not easy to keep pushing when the economy has kind of quieted down a little bit and folks have gone inside. Of course, conversely, now everybody being home has helped that self-employed borrower a lot. There's a lot of contractors that are busy as could be. I'm finding that a lot of people have been sitting around and looking inside their house saying, I think we should do some improvements.
Right.
So the self-employed borrower is a good part of what we do, and we have every hope and expectation that we can qualify them based on the last 2 years' income.
Okay. That's great information there. What about investors, like for like investment property? Let's just say I own a property now and I want to buy. Tell me about investing maybe like in a single family or a multifamily.
It's a big part of what we do. It is a very popular program these days for investors to go out and buy investment properties or to continue to add to their portfolio or to refinance their portfolio because rates are so low. Investors are really centering upon cash flow. You know, it's pretty basic here. I buy a house, I collect rents. My hope is that my rents will help pay my mortgage, if not pay for the whole thing, the majority of my mortgage. So we've done a lot with folks over the last few years who have tried to lower their monthly outgo by refinancing to get to a lower rate. Or when they buy a single family, non-owner occupied property, they do have to put down, down payment money that's larger than if you were to buy an owner occupied property. And as you move up to the 2, 3, and 4 family, that down payment requirement increases. And we have to be careful because when a customer gets involved in buying investment properties, we want to make sure they're prepared for the long haul. So we do require that they have reserves. Reserves are an important part of what the investor has to understand because the phone will ring at 2 o'clock in the morning when a water heater may explode or a water tank may explode or there is a tree that hits your tenant's house and you're going to have the money to go out there and take care of it. So we prepare our clients who buy investment property to make sure they have adequate reserves because the last thing you want to do is not have the money to take care of your tenant's property because your tenant won't want to live there very long if it's not maintained properly. So we do a good job of making sure that there's adequate money involved in the down payment as well as that there's adequate money post-closing so they can take care of the properties. But we do a lot of investment properties.
Right. In regards to the reserves, correct me if I'm wrong on this, but can like a IRA account be counted as reserves? Like
it can be
something like that.
It depends on the retirement vehicle. As long as the money is liquidated, it can be liquidated. We always want to defer to looking at the plan itself. Most plans, retirement plans, allow folks for the ability to liquidate money for financial reasons, purchasing them of a home, or for medical issues. Reserves is something that, as long as the funds are accessible, theoretically, if you're under financial hardship and you need to access those funds to take care of a water heater or a roof on your tenant's property, then you have to have access to those funds. So yeah, we have the ability to work with that, but it depends on the plan. We'd have to look at the plan just to be sure.
Gotcha. So basically, yes, but it depends on the scenario.
Yeah,
right?
you probably are looking at more than likely that those reserves can be adequately tapped from a retirement account. But I always like to defer to what the underwriters have told me years ago. It's never a bad idea to double check and confirm and clarify that before we just say absolutely go out and do that. So
underwriters
got to make them happy.
My goodness.
They are the ones that make us happy.
These guys
love my underwriters.
Gotta love
and my processors. My processors are so incredibly important. They push those loans through the system and they work their tail off morning, noon, and night. And it's a tough time in this industry, but we wouldn't be anywhere without those processors and underwriters. They do a great job for us.
I think that is, and I try to prepare my clients on this because a lot of people come into our office sometimes. They're like, oh, yay, we're buying a house, but it could be one of the most stressful process in someone's life.
We go into it eyes wide open. Like I say, get yourself pre-qualified, know what you're facing. Know there are going to be some stressful moments where you're going to probably lie in bed at night and say, oh my God, I'm buying a house. But as it draws closer to the end and you see that the conditions for the mortgage are being cleared and you're one step closer. I've got a couple today that will be clear to close. And those folks, when I make that phone call or send them that text or that email, it's incredible how
Yeah.
you feel, how they feel, especially
Yeah.
first time buyers. So we do our best to try to exceed the expectations of the client and give them service so they don't have to, feel
Yeah.
that overwhelming
Yeah.
stress. But it
Yeah.
can be tough.
And on another note, with that being said, the way that we communicate with our clients as well is we're firmly believers that nothing good comes without pain. Like hard times and stressful times or whatever the case may be, it'll only make you appreciate that much more whenever you get those keys, whenever you go in, and that's just, I'm not, nothing that's good comes easy. You know what I mean? Like, and it's like
you got to work for it.
You got to work for it, right? You
that's
got to
the way
work
we were
for
brought
it.
up, and that's the way this generation has to understand it. My daughter is one of these kids right now who's got her head down and works hard. My son as well. They put their, shoes on every day and they get off and go to work, and they understood that that's the way I did it, and my parents did it, and your parents did it too.
Yeah.
Nothing comes without some hard work.
Yeah.
But realistic expectations in this world, I think, have to be set for folks. If you work hard, generally there is a reward at the end, as long as you keep your head down and keep your eye on the target.
It builds character, it really gives you endurance in life. If you have everything just given to you, like it's just, you're not going to appreciate it. Let's just put it that way.
Absolutely.
But there you have it. We're gonna put your information down here on a link that if someone wants to reach out to Don. Don is one of the mortgage agents that we work with here. Highly recommend. I think that if we were gonna sit here and talk about mortgages, this interview will go for a couple of hours. So I just wanted to kind of like talk a little bit of what's going on now in the market, and thank you so much for joining us today.
Thank you for the opportunity to reach your audience, and it's been a pleasure. It's wonderful setup here, and I look forward to the next podcast or video cast down the road.
Yes, absolutely.
Tuning in.
You're always welcome here. Trust me.
Okay, be careful. I might be back. Thank you.
No problem. Thank you. There you have it, folks. Thank you so much for tuning in. This is the Rise Up podcast powered by the Scouser Real Estate. We're gonna have some fun. We're gonna have some more people coming in. Thank you so much, and we'll see you next time.